We are back with NYU professor Nouriel Roubini. So I'm assuming you beg to differ with Mr. Buffett's comments, but some people could point to some bright spots in the economy. Advanced retail sales came in stronger, business inventories came in stronger. Do you think there's any hope for the U.S. economy?
Well, I'm worried about the short run. You know, the economy slowed down in the second quarter to 1.6% annualized. Given the revision of the construction number is going to be revised down to 1.2. That's already close to a stall speed. And now all the tailwinds that supported growth in the first half are becoming headwinds. The inventory adjustment has occurred. The fiscal stimulus becomes a drag. The base effects, the census, and all those tax policies that stole demand from the future, like investment tax credit, first-time home buyer, cash for clunkers, are gone. So we know that the second half is going to be worse than the second quarter, and second quarter is down to 1.2%, and the number from July and August suggests a further slowing of the economy. And even if you look at the latest economic indicator, they're not that strong. Retail sales, if you exclude gasoline sales, were barely growing in real terms. Initial claims are still very high. You know, industrial production is not growing as much.
Now, before, about 3 weeks ago, you had a 1 in 3 or better than 1 in 3 chance that we'd see a double-dip recession in the U.S. Then you upped it to a 40% chance. Where do you stand now?
I stand at 40%. I believe we are reaching a stall speed for the U.S. economy. Once the growth rate is at 1%, it's already a growth recession, and it's going to feel like a recession if technically we're out of one, because everything's going to look worse. The job market, home prices will fall, losses the banks incur, and the overall economy, and then anything can tip it into a double dip. Like since the market is not pricing in 1% growth, still at 2.5%, then the stock market could correct further, like in July and August, could have a widening of credit spreads, volatility goes up, risk aversion goes up, and then you have a negative feedback to the real economy, and that's what can push you over the cliff.
Where do you think the S&P 500 finishes the year? Because many people on the long side have been happy that, if you'll excuse the expression, you've been wrong before. I mean, you quoted 2009 saying it would be a horrible year. We had the S&P 500 up 23%. You had said the S&P 500 could be around 600. I mean, in March we hit over 1,200. Let's give the long side something to look at.
Well, first of all, the S&P 500 has gone nowhere for the last 12 months, has gone nowhere for the last 10 years. People talk about one case, but, you know, during the recession, everyone was talking about a recovery, and there was always another kind of bear market rally. And every time, 5 out of 6, I called for that bear market rally. So you can slice the data as you wish and say whatever. The reality, the stock market has gone nowhere because the economy is not going anywhere. There is significant more downside risk rather than upside risk. The beginning of the year, everybody was speaking about a V-shaped recovery. That's out of the window. And now the new normal has become a U-shaped anemic recovery, and there's a risk of a double dip. So given that economic environment, given risk, given volatility, given what's happening in Europe and Japan, I would say stock prices move sideways and possibly downwards.
Yeah, because it's hard to price in, though, to what extent the stock market is actually going to trade purely off economic data, off the macro picture.
Well, there may be a lag between what's happening to the real economy, what's happening in the stock market, but over time, if the economy is going to be as bad as 1% below with a downside risk, then, and the market is pricing in 2.5, that implies there'll be a downside surprise on the macro side, and that cannot be good for the market. Those risks of a rising double dip were leading to a correction significant in the market in July and August. Now we've had 10 days of slightly better than expected data, where the expectation so low was easy to beat the expectation. And we look at under the hood, those numbers are not that great. You know, ISM went up, but then the new orders relative to inventory number is still very weak. The ISM for services is down. Retail sales are not that great. So overall, the economy is barely growing.